Hello and welcome to the Jones Business Management and Growth Consultants channel. And I'm Dan Jones, and I'd like to welcome you to a new series that we are going to do called Deep Dive with Dan Jones. In this series, we're going to spend time talking with just an individual about their business or about business or something that they do related to business and just see where the conversation takes us. I will touch on leadership frequently because that's a big thing that's important to me. And right now we have Mike Laskey with us. And full disclosure, he is my cousin. He is a business banker in the Midwest. And so we're going to start by saying, Mike, thanks for coming and thanks for doing this with me. I really appreciate it.
You're most welcome, Dan. Appreciate it.
Okay. So why don't you start by telling us a bit about your background and your role in business banking?
Sure. I'm currently a senior vice president business banker. I've been in banking since 1985. So in November, it'll be 11 or 39 years. I've worked for large banks, medium-sized banks, family banks, and community banks in both New York State, Wisconsin, and Minnesota. I've done everything from being a collector to being going into the management training program where I spent time as a teller. I opened up new accounts. I took applications and approved consumer loans. I spent some time in our commercial credit department analyzing financial statements. I've been a branch manager, a business banker, commercial lender, slash, they're kind of interchangeable, business banking sales team leader, a market president over several offices, a chief credit officer, and a senior lender. See, I've got experience in real estate lending, whether it's a lot development or non-owner occupied real estate. That would be like an apartment or a strip mall, or owner occupied real estate where the business that people that own the business actually own the real estate as well. I've done C&I lending, which is commercial and industrial. That's to manufacturers and such, lines of credit, equipment loans, some leasing, and finally some floor plan lending. I did have an opportunity to lend to one of the nation's top 25 RV dealers, and I provided them with a floor plan line of credit for their used inventory.
Oh, wow. Okay, good. So, talking about all the different jobs that you'd held and stuff, you said you'd gone into the management training program. It makes me realize just how old banking is, right? It's probably one of the oldest industries in the world, not the oldest. But it seems like they really have it down to a science as far as bringing people up in the banking industry to so that they're well suited for greater responsibility down the road. Would you say that's accurate or?
Yeah, and there's a lot of good resources. There's the American Institute of Banking, RMA, which used to be Robert Morris Associates. Now it's Risk Management Association, where you go to these classes and you're there for 4 or 5 days, and you really learn how to do things like commercial loans to business, understanding business cash flow. So it's a lot of it's in a weird way, it's on the job training because you don't go to college to get that. You go to college, maybe get a business or accounting degree. But when
Right.
you get into banking, you kind of fine tune that into what your specialty is.
Right. Yeah. Yeah. And holding all those different positions, even if you only hold them for maybe half a year or something, as you grow up in the business really makes it easy for you to understand not just maybe the area you're in control of, but the bigger picture of the entire organization.
Mm-hmm.
Yeah.
Mm-hmm.
Okay. Yeah. So that's always a good way to do things, right? So, talking about financing options, what are the most common financing options that are available to small and medium-sized businesses through banks?
Um, Probably the best is to just get a direct loan from the bank. So an applicant would approach a commercial lender, business banker, and talk to them about obtaining a bank loan. That's generally the least costly way to get financing. The second way to do it would be if the loan is or the industry are somehow perceived to be a little bit more risk. The Small Business Administration (SBA)
Right.
has a 7A program where, as an applicant, you apply to the bank approves you, presumably, and if they say there's a little bit more risk, the bank may say, "We'll make this loan, but we're going to need the United States Small Business Administration to provide a 75% guarantee, for example, or a 50% guarantee,
Right.
and we'll handle the paperwork or submitting it to the SBA. And will that work for you?" And we'll go that route.
Okay.
Another one is there's an SBA 504 program, which is for equipment and real estate, just to keep it simple,
Right.
where it's a 50-40-10 program generally, where the bank will provide 50% of the financing. Let's say you're buying a building. The SBA will provide 40%, and the owner only needs to come up with 10%.
Okay.
So there's a lot of other interesting bells and whistles to go with that, but that's a nice way where the owner or the buyer does not need to put that much down. They can just put 10% down. And there's a bunch of other governmental loan programs with tax increment financing and such. But your best bet is just a strict bank loan generally.
Okay. So with those strict bank loans, say, I've got a client, they're set up as an S corporation. They're coming to you. The business only been, around maybe a year or so. They need financing. They got a solid business plan, but they're still going to have to guarantee that loan on their personal credit also, right?
Yeah, absolutely. Almost every commercial loan requires the owners of the business to guarantee the loan. Oftentimes, it's a minimum of someone with 20% ownership. Anybody with 20% or more has to. But
Right.
sometimes you get larger where there isn't anybody with 20%. But we always want to have someone or some people personally accountable, because you don't want someone to just walk away from it.
Right.
You know,
Right.
we're
Yeah.
heavily regulated, the banks are, and we're not lending our money, we're lending our depositors money. So we got to be very careful.
Right. So, for any of my viewers who maybe don't understand that, can you run us quickly through the George Bailey lesson of how exactly, money is lended, maybe, lent, where it's coming from? It's not, in other words, the government's not giving you that money. It's actually your depositors, right?
Right, right. Yeah, exactly. So we basically, that's how a bank makes money. Depositors bring their money to the bank. They open a checking or savings account or CDs, and they know the money is safe there. It's FDIC insured. They have easy access to it through multiple, debit cards, online banking, and whatnot. So that's where their money is, and they can pay their bills and do their daily life things. And then the bank, in order to keep the lights on and the heat on and everything else, we turn around and we lend that money out, obviously at a higher interest rate than what we pay
Right.
to the depositor. So the difference between that is the amount of money the bank makes, and that pays the bank's expenses.
Okay. Yeah. So you like that? I threw it in It's a Wonderful Life reference there with George Bailey. For our younger audience would be like, who? What movie? Have no idea. So, um, can you explain the difference between the term loans, lines of credit, and you touched on the SBA loans, but
Mhm.
what are some of the differences there, or benefits, or for a company with their cash flow or tying up their credit even?
Sure. A term loan is basically a loan where there are monthly or quarterly principal plus interest payments. Whereas a line of credit, um, you're only required to make the interest payments back monthly, and you pay the principal back at what's best for you when you have your receivables come in. So a term loan, an example would be installment payments on a mortgage. So you bought a building and you're going to have a term loan. It's
Right.
generally over a year on that. Or if you're buying some equipment or a vehicle, that would be a term loan. Term loans are secured with fixed assets of equal or greater remaining useful life. So that's important. If you're buying a piece of machinery equipment that has a useful life of 7 years, the bank isn't going to want to lend more than that. So you're going to want to tailor the amount you apply for and the duration to the useful life of that asset. So you wouldn't do a 15-year loan on equipment that's going to be only good for 7 years. It would make sense for you or the bank.
Yeah.
Um,
Yep.
we have advance rates, so you always got to have skin in the game. So some equity, generally 20% down, depending on what the item is. You want to put 20% down. Term loans may have a balloon. So if a customer wants to buy a building, we may go up to 25-year amortization, but we'll put a 3 or a 5-year balloon in there. So 3 or 5 years into it, the loan matures and we review the financials at that time, reset the interest rate, may need a new appraisal, may not, depending on how it's set up.
Right.
But there's a balloon in it. And then, like you mentioned earlier, Dan, a personal guarantee.
Right.
So that's a term loan. A line of credit is, like I mentioned, you just pay interest only, or you just build interest only, I should say monthly generally. And it's often referred to as, for use for working capital. And the term is generally 1 year. Sometimes they can be more than 1 year. It can be 2 years, depending how strong you are and your needs. You can once that term is up, you obviously apply to renew it for another year, or maybe even increase it. If your business is doing good and you need a larger one. It's used to cover short-term timing differences between your accounts receivable and your accounts payable. So you need to buy inventory and you need to get the stuff out the door, and your client isn't going to pay you for another 30, 60 days or whatever your terms are. Well, you've incurred all these costs. Well, that's what the line of credit is for, is to help cover your costs until you get your receivable back from that customer. Lines of credit oftentimes have a rest period just to keep them current. So, we're working at current. If someone has a line of credit, say $500,000, and they max it out and it's been that way for a year, well, it's time to term that out. It's not really being used for the intended purpose.
Right.
This is more a permanent working capital situation.
Yeah.
Um,
Well, I mean, if I can interrupt there,
yeah, sure.
just from a business perspective, you had said, it's interest only, but really it's probably in the business best interest. In my experience, it always has been that when you've got the cash to pay down that balance, pay it down, because you're going to lower your interest payments.
Mm-hmm.
But you're also going to increase, you'll have that cash available.
Mm-hmm.
If there's a shortfall, it's always better to
Mm-hmm.
pay it down and just let the money sit there, versus, maxing it out, like you said, at $500,000. Now you're paying, whatever the interest rate is. And,
Mm-hmm.
being from Jersey, the VIG every month,
Mm-hmm.
it's absolutely senseless to not pay those things down, I think.
Yeah, exactly. So, good point. We bill you monthly interest, but it's up to you, the borrower, to pay the principal down and to be a good stewards of your money, like you mentioned. And why pay if you've got, $500,000 on deposit in the bank and it's not earning you anything, it's in your checking account. Well, you should be paying the line of credit down with that.
Right.
Some of it, at least, anyways.
Yeah, I mean, you could be looking at $30,000 in interest if you kept that 500,000 up for a whole year, if not more, depending on whatever the rates are.
Yeah,
and of course that's tied to your credit also, right? Your rates are tied to your credit. So if you're not financially disciplined, you're going to end up paying more always on that interest. So,
well, just like the term loans are secured with an asset, generally a fixed asset, a line of credit can be secured with accounts receivable, inventory. Generally, it's a blanket UCC filing on all your business assets, which basically is everything but titled vehicles and real estate. But that doesn't mean they can't be secured by that. A line of credit can be secured by titled vehicles or real estate as well. But generally, it's just on all business assets, primarily with accounts receivable and inventory. We do have advance rates as well. Oftentimes the bank will lend 50% on inventory. There are some specific qualifiers. Is it, raw material and finished goods, but, work in process, what is that worth? If it's halfway built, what is it worth? So sometimes there'll be stricter restrictions, or we won't lend based on what's work in process there.
Right.
And like we mentioned, personal guarantees of owners.
Right. So, personal guarantees of owners, and then talking about, tying it to assets. Would you consider personal assets non-business assets when you're doing your determination, or would you want it strictly to be accounts receivable, inventory that's in there, and just tie it to that? Or, say, guys like, yeah, I got, a 30-foot yacht, and my Jeep that, I like to go off-roading in. Would the bank consider that, since they're personal assets, but because it just seems like kind of a murky, area to me. I personally wouldn't want to mix my personal assets with the business, and risk losing my house if, heaven forbid, the economy, went in the crapper, and I lost everything. But what does the bank look at? What do they think?
Yeah, we'll accept that as well. Yeah, we have documents that we can secure with other personal items of the owner, like a vehicle or real estate. Generally, I like to stay away from taking anybody's personal real estate. What I'd prefer to do was have them get a home equity loan or refinance their home and do it that way, and then inject the capital in it, then have a business loan mixed with real estate. That's just my preference, but it can be done if there's a good reason to do it another way. We can do that.
Okay. So what are the key factors that the bank's looking at when they're evaluating a business loan application?
Well, the most important thing is, how are we going to get repaid? So it's the source of repayment that we're looking at. Primary source of repayment is cash flow. Does the business generate enough income to pay all its expenses and pay the bank back the amount that's owed? And sometimes historically that isn't the case. And so sometimes it's because this business is buying a machine or equipment or something that's going to bring them more revenue or more efficiencies in their process.
Right.
And we'll have the owners will, obviously they're coming to us, they've already figured it out, and they'll just share with us their analysis of why this is going to work. They may have just signed a big contract with John Deere or whoever, and
Right.
And they're going to need to do this. So we'll analyze that. We'll take what they've got and take a look at that. So it's cash flow, collateral, because in case something doesn't work, what do we have? And then the third thing would be the guarantors. There's something people can Google if they want to. It's the 5 C's of credit.
Okay.
And sometimes there's 6 or 7, but generally it's been 5.
Right.
And they're like character. What's the character of the borrower? And we can look at that by looking at their credit report. And if you pay your loans and your bills on time, that's good. That helps. I mean, because we don't want to be chasing you for payment,
Sure. Right. Yeah.
So credit report's good, and we recognize that people have things that happen in their lives. They have medical emergencies where things got tight in the past, or divorces and such. But what is the overall, and what is the recent status on that? I guess number 2, I would say, is capacity, and is what's their ability to repay the loan. Again, that goes back to cash flow, capital, down payment, and working capital. What kind of down payment do they have when they're doing things, and what kind of working capital? Do they need a line of credit, or do they have access to their own cash or working capital? Collateral. Number 5 is conditions. I would say that's economic, interest rate, environmental conditions, etc.
Right.
And I always add a 6-1 to the 5 C's, and that is communication. It's so important to talk to your banker. If things are going bad, please don't let them surprise. I mean, we've heard it before. Let us know what's going on. We're partners with you in this, and keep us informed of what's going on. We may have solutions, or maybe be able to direct you to some other people with solutions, but we're human. We understand things happen.
Yeah, I agree with you. I think communication, that probably should top the list of your 6 C's there. And I think it's so important in so many things. If you're the leader of a company, communication with your team. Don't let them find out that, oh, we got a problem the day
Hmm.
that the problem came up, or, that you're worried that, you might not be able to complete a project on time.
Hmm.
It's the same thing, I mean, communicating to the bank, hey, I got this issue, and if I can get this thing done, I've got $200,000 that'll come in within the next 30 days, but I'm a problem right now. I'm 10K short of what I need on materials. Just, if you're always open and communicative with the people in your network, and your banker should be one of those people in your network, usually people will come to you with solutions or offers. May not be, the best deal in the world, but they can usually, if they can't help you, they can put you in touch with somebody that can, or help you figure out a way to forestall, that project without impacting you. There's
Hmm.
options. Communication, is that's definitely
Huge.
that's a real, yeah, it is. So I want to back up though a little bit, because at the beginning of this question, when you had talked about how you were looking at stuff, and people will come to you and they'll say, hey, I've like optimized a process or something. The world is changing at such a fast pace. I mean, from when you and I were kids, and we remember what things were like then compared to now, and it's like every year it gets faster and faster and faster. And so technologies that are available to businesses change. AI, chat GPT, things like that you can use, even. So somebody comes to you and they say, hey, I've created this new process with innovative technology, and it's guaranteed to, cut my expenses by 15% a month, and also increase my accounts receivable, lower my accounts receivable time, from like 60 down to 30, so on, okay, they've come to you with whatever this grand idea is, but it's new. How does the bank go about evaluating something like that?
You know, there's a little bit of truth to the banks are a little bit old fashioned, if you will.
Right.
Um, they're not quick to grasp the newer stuff.
Okay.
Um, Frankly, however, we can be convinced. I mean, you look back at the when fracking came out, and all of a sudden that was a new technology,
Yeah.
and were banks lending? The banks my size, no, but we had all these communities, for example, up in North Dakota, that they needed people, and the small towns didn't have hotels and all the resources. So, as bankers, we were getting borrowers coming to us, hey, I want to build this apartment building, I want to build this hotel, I want to build this gas station, I want to build this restaurant, whatever. And as a banker, we're like, well, is this a fad? Is this going to be,
Right. Are we going to
another one?
finance a ghost town?
Yeah,
Yeah,
right,
right.
yeah. And what was the other one? When ethanol plants became popular, that was early before they seem to be producing now, but they had some rough starts too.
Right.
So that's where we get the SBA involved.
Okay.
It helps take some of the risk from the bank, because we are heavily regulated. The banks that I've worked for are examined and regulated by the Office of the Controller of Currency and the FDIC, and they come in at least every 18 months if you're performing well, and they look through your loans, because a bank is only as strong as the quality of our loans.
Right.
So they look through them and they want to make sure you're making good, sound credit decisions. And the last thing the government wants is the bank failures. So they make sure that we are doing things right.
Right. Yeah.
Having said that, though, if I may,
Yeah.
there
Please.
last I looked, there's like about 5,000 banks in the United States.
Right.
You can Google it. I don't know what it is now. It's kind of dropping because banks keep merging and all that. But
Yeah.
um, that's wonderful, because you have a choice as a customer. You can do the big bank thing, which they have their own niche. It's kind of a
Right.
cookie cutter thing. You can do a community bank thing, where a community banker is going to listen to you more, and they may have a bigger appetite than the big bank. The big bank, they can't have one end of their market doing one thing and another doing another. So they have one policy that covers everything. Whereas a community bank, you oftentimes have your local people are on the board, and they live in the community, and they want to see the community thrive.
Right.
So the community bank is going to be more inclined to like look a little bit outside the box.
Right. Invest in the community, even,
Mm-hmm.
the future for it. Yeah, that's a good point. That's a good point. So, so that brings up a question that, we hadn't thought of before, but, how do I, as a business person, determine what's the best bank for me? What type of bank should I go to?
Mm-hmm. Mm-hmm.
Do you?
Yeah, it's banking. There's a bank in every corner, it seems,
Right.
just like gas stations. And I would say if you've got a bank that you've been with for a while, I would first start with them.
Right.
One of the things that I found out being in banking is that it takes two things to make it work. You have to have the right bank, and you have to have the right banker.
Right.
Just like an accounting firm, you may have or a law firm that you want to use may have a great reputation, but not all lawyers are equal. Not all business bankers are equal. Not all accountants are equal. So you got to have both of those work. So that'd be the first thing. But I would just go to a bank. I mean, the old adage is shop around, and you can do that if you want. But if you feel real comfortable with the banker you're talking to, and they seem to have an interest in you, they're leaning forward and they're asking you questions, then I would go with them. And if you feel you need a second opinion, go with a second opinion.
Right.
I left banking for 2 years to go work for a client of mine, and we were doing something pretty fun. We were flying drones over farm fields and taking data from the farm fields and providing it to farmers. It was pretty cool.
Yeah.
Anyways, it didn't take off. Using the analogy, the a lot of complications, and just the farmers are in rural areas and they don't have high speed internet, and there's a ton of data that's getting the battery technology isn't there yet for these small drones to make them work. Anyways, it didn't work out. But when I was there, since I was a former banker at that time,
Right.
now I'm into banking, I was asked to let's see if you can find some financing from banks. I was shocked when I would call around banks and just ask to talk to them. I didn't realize my competition was so arrogant at times. There's some of these people out there. And I'm a banker, and I know the language. I know what they're looking for. And the way I was treated, I was like, oh my goodness, if I only knew my competition was like this, boy.
Right.
But the people are like anybody else, every industry. You've always got that certain percentage. So
Yeah.
if you get turned off by somebody, don't assume that that's the way all banks are. Go find one that might work with you.
And I find in almost everything that I do, I belong to business networks, and almost every network has a banker in it. Get to know them, and
Mm-hmm.
and if
Mm-hmm.
you like them, then try and work with them. And if they're a really good banker, and a good individual, they may tell you, yeah, my bank's not a good fit for you, but
Mm-hmm.
I know, Joe down at the corner at this other place, and I know that he works in that, or he's done something like that in the past, or something similar. So networking is always, a good way to try and find a good banker. So I think that's funny that you found people being arrogant with you. That cracks me up. Um, so you've touched on this a little bit already, but I guess we'll delve into it a little bit deeper. How important are a bank businesses credit score and financial history in the approval process? I think that falls under that first of the 5 C's that you were telling us.
Mm-hmm.
So I guess maybe if you were rating those 5 C's, that first one for character probably covers the credit and issues there. So where would you say that ranks in the scheme of things?
You specifically mentioned business credit score, and I've worked with
Oh,
those.
yep.
It's generally, frankly, my experience, because I've worked for several big banks. Bigger banks will generally use business credit scores than the smaller banks, the community banks, or the family-run banks. And the reason for that is the big banks are trying to uh, make it efficient to make smaller loans in their world. They're like to make $20 million $50 million, $100 million loans. So when you walk in there and you want a $35,000 loan to buy a used truck for your business, they're going to credit score it most likely. And so everything gets a point. So they will oftentimes pull a business credit score to do that. In the community banking world, which is where I am right now, we don't really pull those. We don't spend the money to do that because we'll look at the personal credit score for the character piece. And then, we will do an analysis of the financial information. Frankly, community banks, oftentimes we do a lot of real estate. So a business credit score isn't really that important because it's receivables, payables, and all that. A C&I loan for sure, but a real estate loan, it really doesn't have any. It doesn't help us at all.
Okay. So, what alternative financing options should businesses consider if they're not a good fit for a traditional bank?
If they're not a good fit for the bank, then and hopefully an SBA loan will be a good fit. There's several other sources of alternate financing you can go to. I think most communities have a community development agency or an economic development authority. Sometimes there are programs with your city, and the state will oftentimes have programs. There's tax increment financing. So there's a bunch of other things out there. Everybody wants a grant, and I don't know where you're going to get those, but the SBA
but every time I open my email, there's I'm offered grants all the time. They've got to be readily available. Mike, come on.
Yeah. Well, and gifts. But the SBA is a good resource for you, or there are a small business development center in your area. Oftentimes they're linked with the colleges or the universities in your area. And there's an outfit called the Service Corps of Retired Executives who can give you advice.
Wonderful organization. Wonderful organization. There's this merchant lending, right, which is a very common thing. I'd first learned about it back in around the time of the financial crisis in 08, 09. I think that they'd started reaching out to my business trying to sell it to me. I'm sure you're aware of that for our viewers who aren't. They'll come in, they'll take a look at your receivables, and then they'll say, okay, well, we're going to loan you $30,000 for 6 months, but you're going to pay us $148.72 every day that the bank is open. I personally think that that's like your last resort. So we've got, the SBA up here, as an alternative lending that you're talking about. Then we go ahead and put the merchant capital down at the bottom. And it's not to disparage an industry. I mean, there have been people that have been very successful with it. The reason I personally think that it can be bad for a business is it's impacting your cash flow daily. You have absolutely no option to say, hey, today I can't cover that payment, but I can cover tomorrow's payment and half of it tomorrow. And then, you know what I'm saying? So you're limiting your choices by doing that. So that I would put at the low end if you're looking for options. Is there anything else out there that you could think of? I mean, of course, going to your suppliers is an option.
Yeah, I think you're absolutely right. And if I can piggyback on that, factors and asset-based lenders have their niche. In fact, I've got a lunch appointment with one that comes out once a year to just touch base with me in a week or so. And just for the audience, what they do is they don't underwrite your business; they underwrite your receivables.
Right.
So if you've got a receivable from Walmart or some big company, I've used John Deere before, but some other big company, they or like the U.S. government, for example, they know you're going to get paid because they know these are strong companies. It may be slower than they'd like, but they know they're going to get paid. So right. So if your business is running into hard times, you're not making much money, they're there to catch you and until you become bankable again.
Right.
They have a niche, but you're absolutely right. They're expensive. And yeah. it is expensive. Yeah, I would agree with you. That would be the last one that you would go to. But if your back's against the wall and you really believe you're going to be able to make it, you just need to, turn around this corner.
Right.
They do add value. Why they call on bankers is because we make loans to businesses, and sometimes those businesses run into tough times, and we're not able to lend to them anymore.
Right.
And so we'll refer them with the client, the borrower's permission, and set up a visit with them. So at least give the borrower another option to consider and to keep the lights on and keep moving forward.
Yeah. So, and I've found, especially like in the service industries, that, it can be very good to, you've got your suppliers, build a relationship with them, always ask them if they offer terms or some type of credit. Because if I go to the bank, right, and I say, Mike, I need money, I need a line of credit, you tell me, okay, I can give you $100,000 line of credit. And that's going to help me with a portion of my receivables. But if I'm having to buy materials, if I can get that also deferred through the supplier, then now your line of credit that you give me is to cover things like my lights, maybe a payroll shortage if I'm waiting for my, accounts receivable to come in. And I can cover that stuff. My materials can be covered by my suppliers. And the nice thing is, this supplier's I got a little bit, this supplier, I got a little bit, this supplier, so I don't owe any one specific person, everything. So, I found, that can be a viable option to consider
Mm-hmm.
when
Mm-hmm.
you're looking,
Yeah, it can be. I had a client recently um, who ended up having to do that. Not recently, several years ago, running into tough times, and
well, we're getting old, that's recently. So,
and the suppliers provided them with some long-term financing on a very large receivable. Just be careful about that because you get into the position where whose receivable is it? If the bank's got a
right.
blanket lien, and then
Yeah,
also people think they've got one. That
yeah.
can get later.
Oh, sure, sure. Yeah. And more in this instance, I wasn't so much talking about taking your receivable to your supplier, but just saying, hey, do you got net 30, or, even, hey, can I get these materials now? Pay you in 30 days. If you've built up a good enough relationship with them, maybe they won't give you the whole kit and caboodle, but they might be willing to finance a portion of your monthly
Mm-hmm.
purchases. And then if you pay that on time, right?
Mm-hmm.
It's that
Mm-hmm.
financial discipline that you've always got to have. You pay that on time, then maybe they finance more a couple months down the road or a year down the road until eventually you've got
Mm-hmm.
the ability, not where you need to put everything on credit, but heaven forbid something comes up, you can put it on credit.
Mm-hmm. Yeah, and it benefits the supplier of the inventory because they're like, okay, it's already out the door,
Right,
and we'll take payments over 3 years versus nothing. So yeah.
right. Yeah, yeah. No. Um, so how about the pros and cons of options like venture capital or angel investors and crowdfunding?
Hmm. Ventured capital, again, with any of those three things, we don't really, it's either us or any of those, generally
Yeah.
speaking.
Yeah.
Venture capital, I just, you got to know what you're doing. They're going to probably take a really big piece of ownership.
Yeah.
It'll be your idea and your sweat, but they're going to put the capital up and they're going to want a big ownership piece. So just know that. Um, Angel investors can be very good. That's like relatives or friends or somebody lending you money. But just be sure to get it in writing. I'm sure they're going to want it in writing, but
Yeah.
you do too. The terms of repayment. But you could have a relative that's got some money, and he or she wants to help you out and is willing to lend you money, but they're hoping to get paid back. They believe in you and your idea, so that's a good source. Nothing wrong with that.
Yep.
And same with crowdfunding. It can be a good example. Just recently. People we know here in town. They want to start up, someone we know wants to start up a brewery, a microbrewery,
Oh,
which is a great idea. I've funded those before. I founded the big one in town right now, I'm proud to say. But and they've got some investors, but they went out on Facebook with my wife and just said, "Hey, we're doing this. If anybody wants to join, yeah, it's not a bad idea. If you've got people, they're going to have a real small piece of ownership in it, and probably get a free couple cases of beer every year or something like that. And in addition
Right.
to, having the pride of being part owner in a business like that. So yeah, it's not a bad deal.
And and sometimes it's nice, just to fund somebody else's dream and watch them have fun with it.
Mm-hmm.
There's something to be said for that. Um, so how can a business find the right balance between, bank financing and alternative lending?
Mm-hmm.
You know, is
Um, yeah, it's
well,
every situation. Go ahead.
well, I think maybe I want to segue back a little bit because one of the things I want to caution the viewers, and I'm sure you would too, if you're telling the bank, hey, you're loaning me this amount of money for, my 10-acre property, you certainly don't want to turn around and try and you know, offer that same 10. Not that deal
Mm-hmm.
go through a title check would throw it, but just to use an example of something, you've got to be clear. This asset's tied up with that. That
Mm-hmm.
asset's tied up with that. But
Yeah.
but
Yeah.
okay. Now that I've interrupted you, I'll let you continue.
No, that's okay. It's a good clarification. The right balance between bank financing and alternative. I would say, discuss your unique situation with your lender and see what they have to offer. You can always contact the SBA and see what programs they have. And I would just say, do your homework, gather all the facts and look at them and see which situation offers the best for you, and go with that.
Yeah, no, I agree with you. And again, that comes back to that 6C, right? Communication.
Mm-hmm.
I always, have a saying, and I pull it from the book of Proverbs in the Bible, but I think it just resonates so clearly. It's a life lesson. Plans fail for lack of counsel, but with many advisors, they succeed. Almost any problem that you have, somebody has experienced that problem at some point in
Mm-hmm.
their life.
Mm-hmm.
And if
Sure.
you're talking, the person you're talking with may not have experienced that problem, but maybe they know somebody that did.
Mm-hmm.
My dad was always really good about saying, uh just ask. There's no harm in asking somebody, what do I need to do, to get
Mm-hmm.
out of this situation. And people are usually very willing to
Mm-hmm.
kind of give their advice. Um so what advice do you have for businesses in managing their financing strategies effectively?
Mm-hmm. Mm-hmm. My advice would be to recognize what you're good at and focus on that. If
Okay.
you're good at a certain aspect of your business, that's what you should be doing. If you can afford it, get expertise help with either bookkeeping or taxes or HR or legal work, whatever. But do what your passion is, do what you're good at. And again, smaller businesses, you wear a lot of hats. You might not be able to do that to a great extent, but um, that's going to be very helpful. And like I already mentioned before, but it takes both a good bank and a good banker to make it work. So, find a good bank and a good banker that you're willing to work with. That seems to be able to meet your um, needs. I'm sorry, I just saw a line on here. Are you okay with this being taped? And I didn't click OK before, so I hope this has been taping all along.
Oh boy. Um, so the uh yeah, now I lost my train of thought, right? Right. We may have to edit that part out, or we can keep,
Oh, I think it
we'll
needs
put
to
it at
stay.
the end of year reels. Um, so, but you were just, talking about we were talking about, your finances and um I had a friend who wanted to open a business, but she was absolutely terrible. She didn't understand accounting at all, but she had a really, really good idea.
Mm-hmm.
Um, a lot of her friends tried to talk her out of it. I told her no.
Mm-hmm.
I go with the idea. you can hire a CPA, you can hire a bookkeeper to do, the day-to-day stuff. You can hire a CPA to advise you on your financial strategies and making sure your taxes are taken care of. Um, I need contracts for my work, but I'm not a lawyer, but it didn't present
Hmm.
me from starting my job, starting my next business just because I couldn't write up a contract. So
Hmm.
to me, I don't think that something like that is really a detriment to somebody opening a business. But how would the bank look at it? You know, and,
Yeah,
and how would a banker look at it, right? There's you, and then there's the,
yeah.
you know,
Yeah, I think an example I just had recently, I've got a chiropractic client,
okay,
and she's getting to the point where she wants to retire. And she has a doctor that works for her that is interested, a young doctor, new, been there 2 years, interested in buying the practice. And my client shared with me, I love to do this, but you know, she recognized that there's two sets of skills there. One,
right,
you could be the greatest chiropractor, but do you know how to run a business? Do you know how to manage employees and motivate them and give them direction and whatnot?
right.
It's a whole different skill set. So,
Yeah,
you got to know your limitations and learn and find resources to be good at that. And oftentimes, what happens? People sell businesses. Um, they'll have the previous owner stay on for a bit to help that transition. That's a way to work around that.
yeah, it is. It is. It's a very good way. And you touched on, a cornerstone for my business, for my consulting business, leadership. You're going and you're going to go do something. You go from just being yourself, a sole practitioner in this instance, right? To hiring a staff. It's very important to spend some time learning how to, again, communicate, share your vision, hold people accountable, and at the same time empower them to be able to do the things and empower them. I would always tell people when I'd bring them on, part of your job is to write the process for anything that you are doing. Now, there's a process already written, but if you find that there needs to be a change made for it, part of your job is to rewrite that process. Part of your job is to evaluate that process. Does this make sense? And make them responsible for it, gives them ownership, right? But that's a leadership function, telling somebody, you know, this is what you need to do.
Yeah,
This is why it's important, and
you
and that's a learned skill, I think.
you sound like an NCO in the Army to me.
Yeah. Yeah, no, that's my brother-in-law rubbing off on me, right? The NCO in the Navy. Well, no, I mean, the Army had a very clear for me. Uh, it clarified leadership for me. I was really lucky. I had a couple of good sergeants starting out. I also had a couple of really bad sergeants. So I was able to look at what worked and what didn't work,
Hmm.
try and do what worked, and try not to do what didn't work. And one of those good sergeants had told me, though, very early on, it was like as soon as I got to that unit, he said, okay, you're fresh out of basic. You know what your job is? To learn the job of the guy above you and to watch the job of the guy above him. And everything that you do, every time you get promoted, every new job you have, you do the same thing. You master the job you have, you learn the job of the other person, and you watch the person above them. And I've tried to, make that part of how I do everything. I try and always surround myself with people that are smarter than me, more successful than me, have better experiences than me. Not because, I'm jealous and, I want to hang out in there. I want to learn. And I
Hmm.
figure, I don't care if this guy's, 20 years younger than me. If he's done something that I haven't done, I want to learn from him,
Hmm.
you know.
Hmm. Hmm.
And I really do, think that the Army, for me, taught me that. Uh,
Hmm.
it's, something I'm very thankful for. So,
Yeah, the military is great on those leadership skills.
oh yeah, it sure is. Sure is. So, the I told you, I want to be able to hit on books, like a
Mhm.
reader list, So I know you're not reading anything really related to banking or business right now, but you are reading about World War II, and you've got a really strong interest in that. Um, and is there anything you'd like to tell me that that maybe you get from, is that just hobby, or is there anything that you find from those stories of World War II that when you're reading them you're able to go, this could actually work in my life, or I could
Mhm.
apply this principle or lesson or anything like that?
Mhm. One comes to mind I'll share with you. We have credit committees when we make large loans. So an individual lender doesn't have the authority to make, you know, a large loan, $1 million loan, right? So you put together a credit presentation and pass it out to everybody, and they read it, and then there's a lively discussion oftentimes about it,
Right.
and we're looking for the strengths and weaknesses and such, and then you vote on it, and George Patton has a quote that I think of when I think of this, and it's, if everybody's thinking the same, then somebody's not thinking.
Yeah.
And you
Yeah.
know, if you get all yeses around the table, all the time, that's not, someone's not thinking.
Right.
Just the way we all are. We all have our different experiences and learning skills and such, and you shouldn't be afraid to express that.
Yeah. No, I agree with you, and that kind of uh dovetails in with, Walt Disney would say, I hate hiring yes men, because he wanted ideas, and innovation comes from opposing ideas from people. It really does. Somebody could look at one thing one way and another person look at it another way. And there's nothing to say that either answer is correct or that either answer is wrong. Sometimes a combination of the two, a hybrid solution, or the other person's solution, you might be, wow, I didn't even think of that because I've never had that life experience, so I never would have looked at something that way. So, yeah, that's a really good quote. And so you and I were talking a little bit about that before we, started the interview. The name of the general I was trying to think of was Omar Bradley,
Mm,
because from World War II, Omar Bradley had said that, good generals learn strategy, great generals learn logistics. And I think that that's a saying that can be
yeah.
taken to almost anything, especially with business. You could sell a million of an item, but if you don't have a way to get them to the customer, you're not selling anything. So, logistics is one of those things that you should dive into every single day. And I think that that's an important lesson from World War II, because the Russians really slugged it out in the East. And I mean, it was like, uh, it was terrible, for them. The British, the Canadians, the Americans on the West, we were slugging it out. But that logistics that we had, there was a general. I think this was anecdotal because I've never heard an actual, this is attributed to a specific German general, but the story goes, how did you know? When did you know that you were going to lose the war? He said, when we captured an American supply truck and it was bringing a cake that had been baked 3 days ago in the United States, and we couldn't even get fuel, you know. And but
Yeah.
that was the marvel of the American
Mm-hmm.
system during the Second World War. Logistics, we had mastered that. We were
Mm-hmm.
messed
Mm-hmm.
up. And so, if you've got a problem in your business, I would always tell people, what are your logistics? Look at,
Mm-hmm.
and part of that logistics is cash flow, and having a good relationship with your banker, because if you don't have the money to buy the materials, you can't get the materials to where they need to be. So,
Mm-hmm. Mm-hmm.
yeah.
May I share another quote that is
Sure.
non World War II related?
Yeah.
It applies to banking, in my opinion. It's a quote from Mark Twain, and he says there's three types of lies: lies, damn lies, and statistics.
Statistics. Yep. Yep. I think That's very, very apropos. But I actually had a young man, because I had told him that quote like 6, 7 months ago.
Mm.
And 2 months ago, I had said to him, um, because we were talking, just about business stuff. And I had said the numbers never lie. And he goes, "Oh, but you told me, and I'm like, yeah, that's entirely different. Statistics is different than numbers. You can think in your business whatever you want to think, but when you go to the books and you look at them, that don't lie. That's exactly where you're at, you know. But I could pull out statistics that'd make it look like I was, winning
Mhm.
the world, you know. So yeah, that's a good quote. I love Twain. There was one dad used to tell me all the time, and I've used this too. He said, so Twain, I think he left home when he was like 16 or 17, and he
Mm.
worked on riverboats and did a whole bunch of other stuff. He said, when I left home at 16, let's say it was, when I left home at 16, I was just appalled at how, stupid my dad was. And when I came back 4 years later, I was amazed at how much he'd learned in so little time.
He's had some great one-liners.
Yeah. But I would tell that to my kids because, when they'd look at me like, "No, dad, da, 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 da," I'm like, "Yeah, yeah, yeah. One day you're going to realize I was right." So that's a good quote for it. Well, Mike, thank you very much for your time. Is there anything else you'd like to add to this before we finish up?
No, yeah, thank you for having me, and I hope I'm adding value to people's lives. So thank you for giving me the opportunity to do that.
Yeah, well, on a personal note, you've always added value to mine, so I thank you, and I thank you again for helping me out with this. And you have a good night.